What's good, YouTube? What's good? As I told you, it is earnings season. Yesterday we had some great banks do their earnings reports. Wells Fargo, JP Morgan, Citigroup had amazing earnings. Amazing earnings today. We get more of the same with TSM. Their earnings report has come out, and we're going to go over it a little bit. If you don't understand some of these acronyms, EPS, FCF, all that kind of stuff. Don't worry about it. On this channel, we're going to be going over a lot of these things, and you'll be able to understand financials, understand some of these acronyms, and be able to understand a little more of the terminology so that you can look through these financials and know what you're looking at and know what it means. So don't be intimidated. Don't be intimidated. It's not as hard as you think. It's not as complicated as you think. You got me? So let's get into it. I'm gonna blow this up a little bit so y'all can see it a little better. We're looking at the statements of comprehensive income. These documents are coming directly from TSM. So let's get into them. As you can see, we're looking at this fourth quarter 24, this red box on the left side. The net revenue in Q4 increased 26.88 billion. 26.88 billion. And then net revenue increased to 868 billion. 868 billion. That's big. To put this into perspective, in third quarter of 2024, revenue was 759 billion. So we jumped from 759 billion to 868 billion, which is almost a $27 billion difference in one quarter. That's insane. That's insane. I've told y'all before that TSM is the heart of the operation. There is no semiconductor chip industry without them. They fabricate everybody's chips from Nvidia to AMD to Intel to Amazon. Anybody who's making chips, Broadcom, they're going to TSM. They're going to TSM. They're the big dog. So let's look at gross margin. This gross margin essentially is the net revenue subtracting the cost of goods sold. So what it takes the company to, produce or fabricate semiconductor chips. So after that, they're still holding on to 59% of their revenue. So that's great. Then you come down to operating expenses. Operating expenses, they spent about 86 billion. So their operating margin is still after cost of goods sold, after paying for their operating expenses, also called OPEX. They're still holding on to 49%. 49% of their revenue. So that's good. It's good. That's almost 50%. Then you come down to non-operating items. They spent about 23 billion, which gives them a net income after all of that of $374.68 billion. You see what I'm saying? So yeah, it's fine to look at revenue, and that's the big flashy number that everyone sees. But you really want to know what the company has after they've paid for cost of goods sold, after they've paid operating expenses, the cost of operating the business, after they pay for that. You always want to know what that net profit is. And to take it even further, we look at the net profit margins. It's 43.1%. That's pretty good. It's 43.1%. That means after all of that, they're still holding on to 43% of the revenue. Now, earnings per share. I did a video about earnings per share. This pretty much is an indicator of a company's profitability. How much earnings or profits are they getting per share? And as you can see, that increased from the third quarter from $12.54 to $14.45. So that's amazing. That's what we want to see. We want to see that EPS continue to creep up. We want to see it continue to creep up. And if you look at the ROE, which is return on investment, you see that has increased from the last quarter to 33.4% up to 36.2%. So they're getting a return on their investments, and it's steadily increasing. So that's what we want to see. That means this company is good with their money, and they're making smart investments because their investments are giving them a return. So the shipment average exchange, we won't worry about that. We won't worry about that. So let's go to the next one. So now we're looking at balance sheets. We're looking at balance sheets, cash and marketable securities. When we're talking about cash and marketable securities, this is money, capital liquidity that the company has on hand or quick access to when we're talking about marketable securities that they can sell into a year and come up with and get the money, or cash that they have on hand. And this money will be used for, any quick debt that they needed to pay off, you know, any quick acquisition or things like that. Just money on hand or money that they have access to in the form of maybe bonds or stocks or something like that in the term when we're talking about marketable securities. And that's 2.4 trillion. That's a lot of money. This company is cash heavy and they are financially healthy. When we come to accounts receivable, that's at 272 billion. Inventories 287 billion. Long-term investments 149 billion. You come down to total assets 6.6 billion, with liabilities only coming out to 1.2 billion. So they have way more assets than they have liabilities. And that's what we want to see from a company. We don't want to see a company in heavy debt. We don't want to see a company upside down with more liabilities than assets. Long-term interest-bearing debts, 958 billion. So they're healthy. They're healthy. They have more assets than they have liabilities. And that's good. Total liabilities, when you add up current liabilities and long-term interest-bearing debts, come out to 2.36 billion. So they're still almost double in assets that they have in liabilities. Total shareholders equity 4.3 billion. And let's go over to the next one. Let's go over to the next one. So this is cash flow. This is cash flow. We talk about net income and we talk about total revenue and all of that kind of stuff. And all of that stuff is great. But if you really want to know the financial strength of a company, where they really stand financially, you want to know how much free cash flow that company has. That's the number that they can't really fudge. That's the number that they can't manipulate by leaving out expenses or leaving out taxes or things like that. So we want to know how much free cash flow. We want to know how much cash flow a company has. So for the fourth quarter, their cash flow increased from third quarter. It went from 1.7, I guess you could run that 1.799 trillion to 1.8 trillion, 1.86 trillion. No, cash from operating activities increased from 391 billion to 620 billion. Man, TSMC is making a lot of money. They're making hand over fist. They're like I told, they're the heart of this AI thing, man. And the demand for semiconductor chips has not slowed down. It's increasing. And that's why you see their revenue. That's why you see their revenue jumping up tremendously. CapEx, capital expenditures, these are costs that the business may have to spend, pretty much investments into the business to make the business more efficient. Things like maybe updating facilities, maybe could be buying vehicles for transport, could be buying more machinery, lithography machines, investing into the business. That's pretty much what capital expenditures are, CapEx. They spent 361 billion, and that increased from third quarter, man. So that means, they're putting more money into the business. They're putting more money into the business. And as you can see, it's paying off. As you can see, it's paying off. Cash dividends, they paid out 103 billion. Bonds payable, 1 million. Okay. And then we come down to investments in others, 88 million. Oh no, 88. Yeah, 88 billion. Sorry. And then the ending balance. So the beginning cash balance, 1.8 trillion. Ending balance after all of that, 2.1 billion. 2.1 billion. So they're getting money from their investments. They're getting cash from operating activities. So they're making money on their operating activities. And, they began the quarter with 1.8 and they ended with 2.1. That's what we want to see. The company is making money even after paying their capital expenditures, even after paying cash dividends, even after bonds. They're still increasing their cash flow. And that's what we want to see, which brings us up to a free cash flow of $258 billion. 258 billion, and that's again cash from operating activities, cash from investments and others, and then you subtract those capital expenditures, Cash dividends, bonds payable, you come out with 258 billion, which was still an increase from third quarter of 184 billion. All right, let's go to the next one. Next slide. And this is pretty much just the 2024 financial highlights, the meat and potatoes, what you want to know as an investor. So you look at that net revenue. That net revenue, they increased from 2023 to 2024. And these are going to be annual figures, annual percentages, annual numbers. So when we're talking about net revenue, the company, increased year over year from 2023 to 2024, 30%. They went from 2023, 69 billion up to 90 billion. That's a good increase. Then you look at the net revenue. The net revenue also increased 33.9%. Went from 2.1 trillion up to 2.8 trillion, almost 2.9 trillion. TSM is making some money. TSM is making some money, and these are the type of companies you want to be invested in. Companies that have a moat. When we're talking about a moat, TSM can do something that no one else can do. TSM indeed has a moat, man. Everything goes through them when it comes to semiconductors. Everybody has to come to them. It doesn't matter what company you are. It doesn't matter if you're using ASICs, application specific chips, if you're using CPUs, if you're using GPUs, you have to go through TSM. That's what we want to see. That's what we want to see, a company that has a competitive advantage, a company that is making money hand over fist. Their profits, their revenue, their earnings per share, everything is going up quarter after quarter, year after year. And that's what we have with TSM looking at these financials. Now we look at their gross margins, 56.1%. So after they're getting cost of goods out the way, cost of goods sold, they're still keeping 56.1% of that money. Operating margins, after they pay any operating expenses essential to running a business, they're still keeping 45.7% of that money. Income before tax is 1.4 trillion. Earnings per share diluted, 45.25 billion. And go watch the video about EPS I did. If you don't know what earnings per share is, we'll be talking a little more about it in the coming weeks when we talk about some other metrics such as PE ratio and other things like that. But that's also increased. All of these figures that I'm telling you about, net revenue, gross margin, operating margin, income before tax, all of these numbers have increased from 2023. You see what I'm saying? Net revenue up 30%. Gross margins up 1.7 points. Operating margin up 3.1 points. Income before tax up 43.6%. EPS diluted up 39.9%. Operating cash flow. Operating cash flow up 47% from 1.2 trillion in 2023 up to 1.8 trillion in 2024. Capital expenditures up 0.7% from 949 billion in 2023 up to 956 billion in 2024. So they're investing more money into the company when it comes to things that can make the business more efficient, like we talked about, you know, more machines, you know, upgrading their facilities, upgrading their IT, all that kind of stuff, any of that kind of stuff. That's what the CapEx is. Free cash flow up 197.9% from 2023 to 2024, from 292.15 billion to 870.17 billion dollars. That is insane. That's insane. That's almost 3x. That's crazy. That's crazy. And then we look at cash dividends. That's what you want to see as an investor. I mean, they're having a lot more free cash flow, which means, they're rewarding their investors. They're paying out more dividends. We've seen the dividends increase from 2023 to 2024, 24.5%, from 291 billion to 363 billion. And then I talked about cash and marketable securities. Again, this is quick money, quick capital, quick liquidity that they have access to in the form of cash, in the form of stocks, bonds, any of that type of stuff. And that came out to 2.4 trillion, an increase from 2023 of 43.5%. And then ROE at the bottom, return on investments, that's up 4.1 points from 26.2% to 30.3%. So all in all, man, TSMC, Taiwan Semiconductors, is doing absolutely amazing. All of their metrics, all of their financials, they're blowing it out of the water. They're making money hand over fist. And I don't see it stopping anytime soon. This is a strong, strong investment. Again, this isn't financial advice, but I want to bring you guys into, starting to get used to looking at these financials and knowing what you're looking at and looking at the growth from quarter to quarter, whether you're looking at a 10Q or a 10K. These are SEC filings that we're going to be getting into in the next couple of weeks because I want you guys to know what these are, know where you can find it. Also, if you wanted to find this, if you wanted to find these figures, you could go to any company's website. Usually scroll all the way down to the bottom. You'll see an investors tab, and then you open that up, and then they'll usually have all of these SEC filings, all of these reports, quarterly reports, annual reports. They may have, and they call it 10K, 10Q, AK. You know, 10K is usually annual reports, 10Q quarterly, AK is any like current reports, information that they want to get out to you fast about current changes or activities that's going on in the company. So you guys need to know what all of this is. You need to be aware. You need to be smart investors. You need to know how to look into the financial health of these companies, and that's what this channel is about, man. That's what this channel is about. So if you got any value from this video, if you like the content, please like, share, and subscribe. Help me grow, man. And I'll see you on the next one.